Hello, everyone, and thank you for attending this very important webinar on IRS tax debt and how to reduce it or possibly eliminate it. My name is Senan Garcia, and at our firm, one of the things we handle is helping our clients, reduce or eliminate their tax debt. A lot of people are probably asking, how is that possible? How can people actually get their taxes reduced or eliminated when you know you have to pay it? And this was actually something that I myself didn't believe was possible. For many years, I had always been told or believed that the only way you could get rid of anything was through the reduction of penalties or interest, but never the tax itself. I also thought that if you even tried to negotiate with the IRS, they were going to be hounding you for the rest of your life in terms of audits or maybe even monitoring your bank accounts. And all of what I believe were myths. None of these things could be true. In fact, it benefits the IRS in terms of trying to get settlements with you because it ensures that they get something rather than nothing. But it wasn't always the case. There was a time when the IRS would actually garnish your bank accounts, garnish your wages without giving you any notice. And in many cases, you were at the whim of the IRS in terms of trying to get anything established with them as far as a payment plan goes, or even elimination or reduction, God forbid, of your taxes. And the reason why that was the case was because the IRS at the time wasn't restricted. It wasn't designed to work with taxpayers. It was designed to collect. It was a collection agency. It was the most aggressive collection agency in the country, some would argue in the world. But what happened? Well, funny thing happened in the mid-90s, and we're going to discuss that right now in the next slide. That was the IRS Fresh Start Initiative. Basically what happened was they realized that client or customers, which were the taxpayers, were having difficulty paying their taxes. And as a result, they weren't able to lead a normal life. They weren't able to buy homes. They weren't able to deposit money in bank accounts. In many cases, they had to live what they call unquote unquote under the table, meaning they couldn't live above or in the limelight, if you will. They had to live in the shadows. And this was affecting them. This was also affecting the government because the government wasn't collecting on their tax liabilities so that they could fund the government. And so what the IRS did was in the 90s, they created this concept called the Fresh Start Initiative. And what it did was it helped struggling taxpayers. And it worked in many ways. First of all, it restricted the IRS's collection of capabilities. While the IRS can still garnish your wages, while the IRS can still garnish your bank accounts, it wasn't like it used to be, which was well illustrated in the Pursuit of Happiness movie, where the protagonist one day checks his phone, checks his bank account, and finds out his bank account's been completely withdrawn by the IRS. No, now there are actually notice requirements. The IRS has to give you notice, letting you know you have a debt, notifying you that we could lien or levy your assets, notifying you that you have an opportunity to try and work out a payment plan. These were done to protect you, the public, and provide you mechanisms to negotiate and giving you more of a bargaining power. And what this did, how this helped? Well, this helped people to bring down the debt to a manageable level, maybe a level where you may have thought was impossible. If you had a debt of, let's say, $95,000, where you could conceivably bring it down to, let's say, $4,000 or $5,000, because that's what you could afford to pay. And now people could come out of the shadows. Now people didn't have to worry about whether they could put money in a bank account or not. They could even establish credit, because obviously one of the things in establishing credit is assuring you have income. So now people can actually move on with their lives and do things that they never thought they could do, such as buying a house, starting a business. And this all came from the Fresh Start Initiative, helping clients. Now, in the next slide, how does that happen? How do you reduce taxes? Well, when we sit down and go with our clients, there are three basic areas that we do. We analyze. We review your current financial situation. What does that mean? We look into your income, your expenses, how much money's coming in, how much money's going out legitimately. If you have to pay car payments, mortgage, credit card bills, car payments, insurance, things of that sort. All these things we look at because it's important. because what you have available after all your livelihood expenses is what, and ultimately, what you can afford to pay. From there, we make recommendations on your financial situation, possibly even finding ways to reduce your taxes. For example, we may notice that you have a car that is old, that you don't have any payments on. Now, the car still works, functions, but you know what? You were probably due for a new car. It'll probably be more fuel efficient, probably get you from point A to point B better, and overall it's nicer. So what we'll recommend at that point is trade in your old car for a new car. Now you may say to yourself, well, wait a minute. You're asking me in essence to spend more money on a monthly basis. Well, that's true, but by spending that money, believe it or not, you're basically saying, I'm going to keep that money and use it on me as opposed to giving it to Uncle Sam. And it's totally legitimate. You need a car to get to and from work. You need a car to live your life. All we're saying is you're just going to upgrade your vehicle, which is perfectly understandable. The other thing we'll do is we'll analyze your assets. We'll see what you do and don't have versus the liabilities you have on those assets. Case in point, we had a client that didn't have any money in bank accounts. They also had a lot of money in cash, and they had some assets in the form of vehicles and some property. Now, we were able to restrict and restructure their debt or their assets so that the assets appeared lower from the standpoint of collectability from the IRS's standpoint, but they weren't able to fully take advantage of some of the deductions. What do you mean? What do I mean by that? Well, for instance, the IRS lets you reduce your bank accounts from an asset standpoint by $1,000, but they don't do that with cash. So this individual, in our example, he had $1,800 in cash, but he didn't have any money in the bank accounts. Now, I just stated a reason why a lot of these taxpayers don't have money in the bank accounts because they're afraid of them getting garnished. So he'd rather keep it in his hand because he knows that way it won't get garnished. Well, what we told him to do is go ahead and put it in the bank account. We're doing a negotiation. The IRS is not going to garnish while we're in negotiations with them. We haven't reached the level of lien or levies. They've maybe threatened them, but they haven't done them yet. And since we're negotiating with them and we've already put notice, they're not going to be doing it anytime soon. So we told them, put the money in the bank account. Well, not only, and of course, just so you know, having cash doesn't mean you don't have to report it. He still has to report the $1,800 in cash. The only difference between having it reported versus in cash versus reporting it in the bank account is by putting in the bank account, we could take the $1,800, and as far as the IRS is concerned, only $800 of it went towards assets. So reviewed his assets, had him put that money in the bank account. He now went from, in essence, for the IRS reporting $1,800 in liquid assets. He was now reporting only $800 in liquid assets. Big difference. Now you may see it's not as a big deal. It's only $1,000, but you'd be surprised how much $1,000 goes when we're talking about asset evaluation. Now, when we talked about how to reduce your taxes, now we get into how we accomplish it. Once we get all this information, we go to the IRS and we start negotiating with them. Now, there's different levels. We deal with multiple levels, from revenue officers to appeals officers to tax attorneys that represent the IRS. We go with them and we explain the situation. We explain your situation. Okay, how do we do this? Well, in addition to reporting the initial documentation that we talked about in the previous slide, we also submit documentation to support our position, such as where your expenses go, documentation regarding that. Obviously, the bank account information, we're going to present the bank accounts, the actual statements. We're going to show proof through market values of maybe certain assets that you have. Okay? And if necessary, if we don't get the right ruling or the ruling that we feel is correct, we will not have any issue appealing or, if necessary, going to tax court. Now, we hope it doesn't have to get to that point, and usually it doesn't have to get to the level of tax court, but if it does, so be it. The most important thing that we do is we make sure that your interests are not only represented, but they're insured as far as this is the amount of money that you can afford to pay, and this is what you're going to be able to pay. Now, of course, we can't guarantee what the IRS will say or do, but these are the ways we go about ensuring that you are protected, you are represented, and that you try and get the most benefit in terms of a payment plan or a payment arrangement with the IRS so that you can move on with your lives. And the next slide, I'll get to in a minute, we talk about exactly what we do. What's our work ethic? And you can read it there. You know, it doesn't matter whether it's income, personal income taxes, corporate income taxes, or even payroll taxes. Our goal is to work tirelessly to remove all those issues from your life so you can move on with your lives. Okay, we want to get you out of the shackles of tax debt so you can achieve whatever goals you may have, whether it's setting up a business, expanding a business, owning a home, owning a car. Create that future that you always wanted. That's our goal. That is always our goal, and that is what we seek to do. And just a quick side note, because some of you may look at payroll tax and say, well, wait a minute. What do you mean by payroll tax? I thought payroll tax you couldn't, get away from. And yes and no. And just a quick little discussion on payroll tax. Payroll tax, half of that money obviously comes from the employee's check. Half of that money is paid for by the employer. Now, the employee's part, that is a debt that is very difficult to remove because that goes to a trust fund and that must be paid. The employer side is a side that usually we think about in terms of reducing, because that's the side that can be negotiated. And if you are in a position where you own a lot of payroll tax debt, that is certainly something that we want to work with you in trying to getting reduced or even eliminated depending on the circumstances. And that is what we're about, working with you to get these out of your hair so that you can focus on more important things, whether it be your business, whether it be your personal life, no matter what. And we're here for you. And I'm sure a lot of you have questions, and we'll go to the next slide now. Send them our way. If you're not sure if your tax debt is something that we can resolve, or you're not sure you have a tax debt currently, or you feel you may have a tax debt, we've had some clients that they haven't filed tax returns in a few years because you're afraid of the tax bill coming. Give us a call. We can't guarantee anything other than we can hear you out, see what your situation is, and determine if there's a way we can help you. And if worst case, we can't help you, we at least hopefully have educated you on your current financial situation. At this time, we're going to end the webinar. And again, if you have any questions at all, please reach out to us. We are here ready to assist you and ready to answer your questions as best as we can. Thank you all for attending this webinar, and we hope you have a great day. One thing. Hola y bienvenidos a nuestro webinar sobre reduciendo o eliminando su deuda con el IRS. Gracias por atender. Yo sé que mucha gente que están escuchando en nuestra